I don't think it's early at all. I think Bitcoin is gold for the digital age. And I think until Bitcoin is as valuable as gold, which is about 9 times higher than it is today, you're still early. And I think Bitcoin is more functionally useful than gold as a monetary asset and will gain additional use. So I think it has room to run above that. But you can't be early when most financial advisors own 0% Bitcoin. You can't be early when most institutions still own 0% Bitcoin. I don't think that will be true in 4 years, but it is true today. So I don't think you've missed the boat. I actually think this is the best risk-adjusted time to buy Bitcoin in its history. And eventually you will have missed the boat. Eventually you will be too late, but you're not too late today.
Matt Hougan claims that we are currently in one of the most underappreciated stages of the cryptocurrency market cycle. Due to static prices and protracted uncertainty, retail morale is at an all-time low, and many investors are pulling out. For example, Ethereum has not changed much over the last year, exhibiting only a slight increase. According to Hougan, however, this is precisely the moment at which smart capital begins to position itself. He contends that for long-term investors, the absence of excitement in the market is actually a bullish indication. Hougan believes the groundwork is being set for a huge breakout as ETF infrastructure improves, global regulatory clarity grows, and institutional demand steadily increases. In fact, he believes that once the next wave of acceptance starts to take shape, the overall value of the cryptocurrency market might reach $1 trillion or more in the next 2 to 4 years. Please remember to like this video, subscribe to the channel, and enable post notifications before we delve further. Thank you and enjoy the video.
If the US goes in the market and buys 1 million Bitcoin, so will the UK, so will Europe, so will Russia, so will China, so will every other nation on earth.
A lot of them already are. They're in anticipation of this. They're already beginning to move.
We've had conversations with multiple sovereigns at Bitwise, right? Just at Bitwise, with people thinking about how this game theory will play out. I will say, Rick, if this happens, I think Bitcoin moves aggressively, to $500,000 or more almost overnight. You've even had Larry Fink, CEO of BlackRock, not one for outlandish price targets, say that if there's a adoption of Bitcoin as a strategic reserve, you're talking about $700,000 Bitcoin. And the crazy thing is this could happen. It could happen later today. It could happen tomorrow. To get back to your question of when to position in this market, you have no control or knowledge over when or if this positive catalyst will occur. But if it does occur, I can guarantee you will be too late if you have a 0% exposure before. It's an asymmetric bet. And I would argue that the risk of Bitcoin going to zero has been severely diminished. So even that downside, I think, is virtually significantly diminished from where it was before. I don't think it's early at all. I think Bitcoin is gold for the digital age. And I think until Bitcoin is as valuable as gold, which is about 9 times higher than it is today, you're still early. And I think Bitcoin is more functionally useful than gold as a monetary asset and will gain additional use. So I think it has room to run above that. But you can't be early when most financial advisors own 0% Bitcoin. You can't be early when most institutions still own 0% Bitcoin. I don't think that will be true in 4 years, but it is true today. So I don't think you've missed the boat. I actually think this is the best risk-adjusted time to buy Bitcoin in its history. And eventually you will have missed the boat. Eventually you will be too late, but you're not too late today. Look, I'm bullish across the board. As mentioned, I think Bitcoin is undervalued by a large factor. At Bitwise, we think it's going to hit $1 million in a coin by 2029. So I think it's on a tremendous trajectory of growth. Right now, I think these programmable blockchains across Ethereum, Solana, Aptos, Sui, all of these competitors are probably undervalued by the market, because you're not seeing a dramatic uptick in use yet, even though we're seeing a dramatic change in regulation and opportunity. And so retail investors are soured on these assets. Ethereum's only up 2% over the last year. Bitcoin's up 95%. And I think the reason is we haven't seen the payoff of this regulatory change yet. So I think that's enormously exciting. And then I honestly think DeFi as a sector is probably undervalued, because DeFi has so far been restricted to crypto-only applications and the crypto-only market by regulation. But it's proven that it can be a much more efficient financial infrastructure. And I think over the next few years, it's going to be freed to compete with traditional finance. And I think it's going to win. So I think DeFi is an attractive area to look at right now as well. This is a multi-year market. What that means for investors is, who knows what happens over the next 6 months, right? Retail sentiment in crypto is at its lowest level in multiple years. There's actually despair in retail crypto because Ethereum's only up 2% over the last year, and that's a disaster. But for long-term investors, it gives them a window to allocate to the space before prices run away. I do think we'll work up in 2 to 4 years and crypto will be a $10 trillion market and people will wonder what happened. But for the time being, this disconnect between impatience and the reality of DC is creating opportunity for investors, and I think that's pretty exciting.
For Bitcoin and other digital assets, a declining value of the US dollar has frequently been favorable, driving up prices. Long-term inflation, however, may provide short-term difficulties for riskier investments, such as cryptocurrency. Therefore, when determining when to enter the market, investors should consider the overall state of the economy. The rise of stablecoins is one significant trend Matt Hougan anticipates in the future. According to him, stablecoin legislation will probably be the first significant crypto bill in the US to receive bipartisan support, because it is a rare win-win situation in Washington, benefiting both the government and conventional banking firms. Don't forget to subscribe and hit the bell icon to stay updated on our latest videos. We'd love to hear your thoughts in the comments. Now let's dive back into the interview.
It's soaring. So they're used within the crypto economy if you want to trade out of Bitcoin, but you don't want to move money to your bank, which takes multiple days and their fees. You can park them in stable coins to hold the value. But what I'm really excited about are 2 real-world applications, one in the US and one internationally. So in the US, something that frustrates me, because I'm an efficiency guy, as you know, is that Visa labels a 2% fee on every transaction we have, and debit cards come with a 30-cent fee plus a variable fee. And money should move with text. I don't spend $1 every time I send you a text. There's no reason why money has to have these burdensome fees on top of them. And if we get stablecoin legislation and stablecoins can be used for payments, I think we could see retailers across the world let you pay with stablecoins and save that 2% fee directly. I think it could reduce costs, increase margins for challenged industries like restaurants, et cetera. And I don't know, that 2% fee just frustrates the heck out of me. So I can't wait for it to go away. And then internationally, if you're not in the US, you have much worse financial rails than we have here. You're paying higher fees to move money. It takes more time. There's a huge amount of corruption. If you have stablecoins that are regulated and you're in Latin America or you're in sub-Saharan Africa, you can use effectively US quality financial rails to move money in a stable currency across borders or within your country. That's a game changer. And there's really dramatic use of stablecoins even today in sub-Saharan Africa through a project called Yellowcoin, which is really reducing the fees for transactions. In Latin America, where there's huge growth because people want dollar assets. We're hugely privileged here to have a pretty good financial system and a pretty good currency. And we forget that there's, $7 billion people who don't have that privilege, and stablecoins gives them that opportunity. So I think it's a win both domestically and internationally. And I think it's just a no-brainer. If you think it's a strategy that long-term he imagines a fortress America with large tariffs, then I do think that's probably inflationary, and I do think that's probably challenging for rates, and therefore I think it's challenging for risk assets. So I think there's the potential for negative risk. If you think what the Trump administration is actually trying to do is lower the value of the dollar, because that makes US manufacturing more competitive, and lower long-term interest rates, and that the trade war is a tactic to get to that end, to force people to the negotiating table, and that's hugely good for crypto. I personally think that there are a little bit of elements of both, but mostly I think it's a tactic to drive that other outcome. I think what Trump wants is a weaker dollar, a stronger US manufacturing base, and I think that is probably net beneficial for crypto, which thrives in weak dollar environments. But you have to accept the risk that there could be short-term inflation, which would keep rates higher than they otherwise would be, which would be a headwind. So it sort of depends on your view of what's going to happen long term. Stablecoin laws will be the first because it's a slam dunk. There's bipartisan support for it, right? Everyone loves it. It helps the US issue more debt, which we love to do because stablecoins buy US treasuries, and that's great. China isn't buying US treasuries. We need a new buyer. So stablecoins are going to be one of those. It exports the dollar to emerging and foreign countries because they can use stablecoins to conduct financial transactions much easier than they can tap into US central banks. So it's a win-win for America, and it's good for crypto. And Wall Street wants it because Tether, the largest stablecoin issuer, makes more money than Goldman Sachs, and Goldman Sachs doesn't like that. So they're going to want in on the game too. So I just think there's overwhelming support for stablecoin legislation. I think we'll see it, and I think it will kick off a stablecoin boom that is very significant. Yeah, the incredible thing is this is happening in a decentralized fashion. I saw earlier today that Florida was talking about $1.5 billion investment into Bitcoin. You're seeing sovereign wealth funds in the US at the state level, at the federal level, at other countries move into this space. I think people are hungry for a non-fiat monetary asset to anchor their real return in, and it's happening at an incredible pace. Anthony Scaramucci described it as a decentralized Bretton Woods. I don't think that's a terrible turn of phrase, and it's wonderful to see these states moving forward.
According to Matt Hougan, we are not only seeing the development of cryptocurrency, but also the real-time emergence of a new financial systems framework. The decentralized nature of this moment is what gives it its potency. Stakeholder wealth funds are starting to see digital assets as sustainable, long-term stores of value, and states like Florida are investigating billion-dollar Bitcoin investments. According to Hougan, this momentum is being driven by the desire for a non-fiat monetary instrument, and Bitcoin, with its fixed quantity and widespread appeal, is filling that need. However, the upcoming stablecoin boom may be much more interesting. Hougan is right when he predicts that stablecoin legislation will be the first significant crypto law authorized in the United States. Political parties, Wall Street, and regulators all clearly benefit from this uncommon sector. By purchasing Treasury bonds, stablecoins help the U.S. pay down its debt. They also make U.S. dollar assets more accessible worldwide, particularly in nations where people are in dire need of effective payment systems and financial stability. Hougan is enthusiastic about the potential of stablecoins to transform regular payments at home. Currently, merchants must pay roughly 2% in credit card fees for each transaction, which reduces revenues, particularly for low-margin industries like retail and restaurants. These costs might vanish if stablecoin payments gain traction, saving companies money and enabling transactions as quick and easy as texting. Don't forget to like, subscribe, and enable notifications for more valuable content, and as always, happy investing.